About a banking, what is the role of a banking in investment? See, investments and banking, those are two different terms. Investment and banking, both are different terms. Investment, it means we have discussed, so that will invest in financial instruments, correct? And instruments, it could be real estate, bond market, loans, cryptos, commodities, including golds and all, even FX market, means currencies. So you can hold currencies, all right? And now if I talk about banking, see why banking come into picture, understand this one. See, banking system, it's like a oxygen, guys. It's like a oxygen. Oxygen, it means without oxygen you cannot survive. The similar way, without cash transaction or cash, cash part, your financial or investment system is nothing. Nothing, it means nothing. Why? Understand this one. In history, we had a barter system. In history, we had barter system, correct? And in barter system, means people, they were exchanging goods versus goods versus different coins, goods versus different service or goods. But in this 22nd or 21st century, we have a different exchange model, right? Now in a 99% cases, we exchange everything with cash. And that's what I stated. Cash, it's like oxygen. Cash, it's like oxygen. It seems oxygen of your business, of your banking system or investment ecosystem. Because we compare or measure value of securities. We measure value of securities with cash. For example, let's assume it. You have decided to, let's say bonds price, let's say ABC Corp bonds you have decided to buy, and bond price is 1000 rupees. How will you purchase this bond? You will have to use your cash, which is INR or any other currency if you're holding. So you can transfer this cash to the counterparty and you can hold or purchase or acquire, buy, hold or acquire this particular asset. And this quantity, or I would say particular units, you will call it as a assets. Why assets? Because that units hold value. And that value will treat as an assets. Assets, it means if you sell out that particular assets, you will get the money back. Maybe let's say per bond price is 1000 and you have decided to hold 100 bonds. 100 into 1000, it would be around 1 lakh. So value of investment would be 1 lakh. Again, we have calculated or measured the bonds value in a cash, and actually we have valued your securities in INR or cash. Did you get this? So without cash, your bond has no value, or your any financial instruments has no value. And now if I talk about banking system, who take cares of funding? or payment. Who take care of this? If you want to transfer, let's say, cash from one account to another. Let's talk about now banking. All right, why it is oxygen and why that cash portion comes under your banking system. All right, let's say Mr. X want to take a loan from XYZ, let's say institution, which is HDFC Bank. All right, and that loan Mr. X want to invest in stock market, or maybe let's say real estate market. Now your question would be like, sir, why this Mr. A want to acquire property? I'll answer to your questions at the end, guys, okay? Because this will actually disturb my flow, but don't take me, in a other way. Otherwise, just give me some time. Let me explain, and then at the end, we'll discuss, your questions and answers in detail. So don't worry about it. Just note it down. All right, or at the end maybe I'll allow you to directly ask questions. That's what I requested initially. If you can carry pen and paper, and at the end if you ask me questions, I would more happy to answer all your questions. All right, let's say loan cost is around 10%, and this person is okay with taking loans and investing it. And let's say again this Mr. A did some research and got to know market is offering 15 to 20% of return on equity. And if let's say if this person can apply to the loan of 1 lakh and invest in, assuming that invest in, let's say, SBI stocks, it's just an example, let's say, and that stocks delivered 20% return in 12 months of duration. If you just calculate the cost of loans, 1 lakh into 10% for per annum, just calculate it, it would be around 10,000 rupees interest payment, so which is a cost on loan. And on other hand, if you just compute on same amount, because it was invested in a SBI stock and the stock price, let's say, increased to the different level, and we have now 20% return in your stock price. And if we have a 20% return in your stock price, just calculate it, 1 lakh into 20% divided by 100, sorry, this one, so 2 into 2, 20,000, right? So once you sell it out investments, you will receive 1,20,000, and this 1,20,000 you can return, say out of 1,20,000 you can return first loan principal amount, which is 1 lakh, and also return the interest payment which you have promised, which is 10,000 as a cost. So net your profit would be 10,000. Now here the important question is, how did you get this cash? Who processed loan payment to you? Who gave that opportunity to make this 10,000 rupees? Of course, banking system. Who gave this? Banking system gave this opportunity to you to make that money. How banking system gave that money? Understand this flow as well. So I'll quickly share my another screen to quickly walk you through that PPT. Let me just see if I have handy that one. Oops, I don't have, I believe. That's fine. That's fine. I don't have it now open, but that's fine. All right. How this banking system offer this opportunity to you? So understand the background. Let's say Mr. Y Mr. Y want to deposit money with the bank with the interest payment of, let's say, 6%. And again, HDFC Bank decided to accept that deposit at 6% interest payment. Deposit amount was 1 lakh. Once, let's say, bank has received deposit liability received, which is 1 lakh. Once the bank received deposit liability, of course, bank will maintain the CRR, cash reserve ratio provision, and SLR provision, which is statutory liquidity ratio. Assume it, the provision of CRR is 4% and SLR provision is 20%. So still, bank will have a net payment available for loan business. It would be around how much? 20%, 20,000 and 4%, so 24,000. So it would be around 66,000 net amount. So this 66,000 net amount HDFC Bank will offer as a loan. Did you get this? See, this point was very simple. One is to accept deposit, because main business of HDFC Bank is to accept deposit and to offer loans. And when bank offer loans, bank always charge interest payment. It could be 12%, 20%, 10%, 15%, 10%, depends on the CRR and SLR ratio. I'll explain that CRR and SLR not now, maybe in money market session we can have a in detailed discussion on CRR, SLR, their impact on inflation, stock market, investing, and all other segments, how this market actually react when CRR or SLR reduce or increase. All right, we'll discuss that in details. That would be separate discussion, and we have a separate module for this. But here the point is, when we talk about banking system, role of banking system in investments, you can relate that. Just because of this acceptance of deposit and offering loan facility, someone got the opportunity to make the some profit by leveraging loans. All right. Apart from this was just one example why this bank system or banking come into picture. Investment and banking come together. Another term that I would like to explain here means with the relation of your investment and banking. Let's say you are a businessman. You have your ongoing businesses. All right. You are Mr. C. You have decided to acquire ABC Corp. Correct? You have decided to acquire ABC Corp, and your requirement is 2 lakhs. You have your own contribution, let's say 50,000 cash that you have arranged, and you are looking for leveraged loan amount, which is 1,50,000. Here you will get the multiple options. One, you can approach for a bank to arrange funding. Second, you can ask for HNI people or wealthy people or hedge funds or PE funds to help you to get the funding, or maybe to help you to acquire that business. All right, and if they agreed with it, again another question is how PE funds raise or arrange funding. They also raise fundings from HNI people, PE funds. HNI people means wealthy people. If I talk about, let's say, Adani, Ambani or other families, they are wealthy people that comes under highly net worth individuals. Their wealth is huge. They can fund. Second, if I talk about bank, how bank arrange funding, because bank also reach out to the HNI people or maybe deposit holders who are interested to deposit money with the bank. And once let's say bank have a money, then bank can offer that money to the again this person Mr. C to acquire this ABC Corp. And once let's say, see, nobody offers fund in free of cost. Deposit holder charge 6.5% interest payment. Bank offer loans with 15% interest payments, right, to this person. And if let's say this business has a potential to generate more revenue, then that's fine. You can easily return liability, whatever that liability you have received depends on the payback period. Payback, it means how you will process the loans liability to your means basically lender, right, or how long it will take to recover the entire amount. So that period we'll call it as a payback period. All right. So how you can return that money? So it means you can return liability, interest payment, as you have agreed. See, everyone will make money through this process. Your profit is income from business operations and equity value. As a businessman, you can multiply your equity value from X point to Y, means from X value to Y. And same way, other participants, they can participate for an interest payment. See, once you return interest payment to them, they'll receive 15%, right? 15% minus, which is 6.5. It would be around 9.5 something profit that bank or private equity firms, they'll make it. So everyone will make profit out of this business transaction. But again, the key aspect, if you see, key aspect, which is a cash. Because this Mr. C wanted a cash to acquire XYZ organization. And banks and other institutions, they facilitated amount or arranged the amounts to facilitate Mr. C to acquire business. Why? Because let's say Mr. C did some sort of research and got to know if Mr. C acquire this business, then this business will offer healthy cash flows, and within let's say maybe 2 years, 3 years or 5 years down the line, everyone will get their money back along with the appreciation in equity value. See, the investment transaction started with investment purpose only because he wanted to invest. Acquisition, again, it's a part of investment that he wanted to invest. But if you see the ends, which has done with the cash, because every other partner is looking for a cash. If I invest X amount, then what would be my return? If I invest Y amount, then what would be my returns? And everything that will compute in a cash and process it out. So now let's understand the role of different counterparts in this particular transaction. If I talk about investment banks, IB work here to help Mr. C to underwrite the process. Underwrite, it means evaluate certain things, cash flow, assets, liabilities and everything, and compute the value of a business. Then banks basically comes here, banks to arrange the funding, right? Arrange the funding on behalf of clients and process the payments. Bank also works as a custodian agent or the transfer agents of assets or investments. They play a role very crucial in this particular transaction and to support Mr. C to execute these transactions without failure. Because if C fails or any other counterpart fails, it will lead to the penalty and huge cost as well. Apart from this, private equity funds, hedge funds, mutual funds, insurance companies, and any other family houses or companies, if they are keen to interested to invest money in such a transaction, they will also participate. Then what about government's rule then? Governments will design policies. SEBI will design policies around investment, stocks, bonds, financial instruments, issuance of financial instruments, how you can issue, what instruments you can issue, what are the instruments that are allowed as per SEBI regulations. That all regulation parts comes under governments and different government sponsors or government agencies who work for governments or public to ensure transparency and more accountability or followingness of I would say laws or regulations which we have. Did you get this? It seems very simple, but guys, it's not as simple, okay? It's a very critical, and I hope now you got the purpose of two different entities. One which is investments and banking. Now combinedly we can read investment and banking. Investment and banking. And here if you see, the first we were talking about this one portion, instrument. All that instrument, if you want to buy any instruments without cash, you cannot buy it. And that's why I have called it out. It's an oxygen. Cash, it's an oxygen of investment and banking system. Without cash, there is no importance of bank in society, because bank control your cash management system. Where we open the saving account, where we open the current account, where we open the accounts for investments. Of course, we open accounts with bank, right? Because we have a digitalization, so that once you open a bank account with, let's say, XYZ banking institution, then you can quickly transfer your funds from one account to another. Let's say your counterpart which is in US, you are in India, how will you transfer a trade consideration which is a value, means cash amount? Of course, you need a bank. You need a bank or institutions to take care of your funds or transfer your funds or convert your funds from one account to another. Let's take the same example, how again banking is helping to the investment spectrum to redefine that, or to faster the transactions or process. Let's talk about that as well, in terms of means how bank is actually adding value. Let's take the same example here. Let's say your bank is from India and P fund is from US, right? That fund registered in US, but same P fund want to now invest in India. How that P fund, let's say P fund, I'm assuming it's a Citadel P fund, which is agreed to invest, let's say 50,000 per dollar price, I'm assuming, which is 50 rupees, all right? And 50,000 if you convert into USDs, it goes around, let me calculate a dollar totals, so it will easy to understand. Current rate is something different, I'm just taking as an example. So 50,000 divided by 50, it would be around, in a dollar, if you convert this INR, it would be around $1,000 that Citadel is agreed to invest in your deal, basically. Now if we talk about how this Citadel will transfer this money to you, how this Citadel will transfer, just imagine how Citadel will transfer that amounts to you. So if you see, there are ways how Citadel will transfer that amounts to you. One, that Citadel can appoint their intermediate bank. Let's say intermediate bank is Citadel is here, pay fund. Let's say they have a good rapport with JP Morgan Bank and their USD account is with Citadel, sorry, a JP Morgan amount with, let's say, this USD, or basically I would say this JP Morgan can, Citadel can open account with JP Morgan and deposit $1,000. Let's say JP Morgan has Nostro account. Nostro account, it means foreign accounts. Nostro account for INR with HDFC Bank. See, anyways, your client is looking for INR. If you have a dollar, USD, GBP, that doesn't matter at all. Are you getting my point? So, at the end, your client need money in INR. And if your client need money in INR, so you will have to arrange that money in INR only. You can't say, look, I have a $10,000, I'll give it that to you. Can you please convert? See, ultimately, your clients need money in INR because your client is from India, and in India, only we have INR currency, not any other currency. And without INR, you can't even invest it. All right. So basically here JP Morgan will help you to convert that USD into your INR. How they'll convert it? See this. See, for a Nostro and Vostro, RBI control this process or offer that facility to convert USD into INR. So here JP Morgan can deposit USD to the Nostro, which is 1,000 USD. Let's say with the rate of 50, 1,000 into 50. If you see $50,000, it would be around 50,000 INR, and this 50,000 INR rupees through Nostro Vostro system, it will convert and transfer to the, let's say, HDFC Bank. So this bank will receive instructions, bank will accept it, and let's say Mr. C has accounts with HDFC, and finally C will receive that money. See this how process is complex, and even it's a time consuming as well. And once the Mr. C received payment, then again through banking system only, this person will confirm to the bank, means immediate recipient bank, and recipient bank will confirm to the JP Morgan through their different network. And once the JP Morgan, let's say, got received confirmation of funding, then JP Morgan will confirm the same funding instructions to the Citadel as the fund has been finally transferred to the end beneficiary. The beneficiary name is Mr. C. See, now you tell me, without banking system, how would you manage such transactions? Your question would be, look sir, if we don't have a banking system, because in past also we had no banking system and we used to manage the transaction physically. Today also we can manage it. Yes, you can manage it. In rural area, what happened? In rural India or rural world, still we have a physical banking system. So we don't approach to the banks. We directly execute the transactions. We hand over the physical cash from one hands to another. We transfer it and execute the transactions. But if you want to faster your transactions, quickly transfer one amount to one amount from one accounts to another, then without banking system you can't process it out. Did you get this, guys? Yes, no? You can just text. All right. So this is how your basically banks actually helping to the investment spectrum to faster the investment transactions, so that we can bring more transparency and avoid frauds. And even the RBI or SEBI finance ministry of our nation, everyone is trying very hard to get this, means market, it should more transparent and more even counterparts or holders of this market, they should more accountable to take care of transactions very carefully. The reason is sometime you would see the involvement of money would be very high, and that money would be from mediocre people of a country, and that's why it's very important to ensure that we have regulations in place, we have rules in place which restrict everyone or prevent potential frauds like Harshal Mehta scandal or Mehta, or we have seen lots of scandals in history. And to prevent that, we should have to have a regulation in place. So I hope now you got the understanding of like what is investment and banking. Investment, it means investing in financial instruments, but if you want to invest in financial instruments without banking system, how will you invest it? So we can't separate investments and banking. Okay, so that's why we always read investment and banking together. But when we talk about banks, banking more focuses on cash. And when we talk about cash, so let's talk about what are the other legs come into picture when we talk about investment banks. Investment and banking. If we talk about investments, as I said, we have a stock market, we have bond market, we have even loan market, right? FX market. But basically FX market, it will be under banking, even investments also, because we also invest in dollars as an investment purpose and commodities. If I talk about banking system, here the main work would be cash management, currency conversion, payment settlement, provide safety and security to the cash payment transactions. Now, if I talk about these markets, segments, you would see the markets which come into picture is FX market and money market. And if I talk about these markets here, your major segment should be stock market, bond market, right, asset servicing, regulations and all. And also we'll discuss about regulations and participants. Like who are the participants, regulations around the stock markets, bond market, asset servicings and all. And that is also in details. And market types, or their instruments types basically. If I talk about stock market, we have common equity, right? We have preference equity and other instruments. Same if I talk about this money market, under money market we have different instruments. It can be commercial paper, notes, T-bills, then call loans, and all other financial instruments, and of course regulations and participants of money market. See, this is how your syllabus is also designed. So under investments, we're going to talk about this portion. Under banking, we're going to talk about this portion. And of course, one more major portion which we are pending, which is KYC and AML part. That also it will be covered under investment and banking modules. All right. And see, whenever you invest in equity, bonds, debentures, we always check some certain parameters, I would say. So in terms of valuations, so we have one dedicated sessions for valuations also. See this, I have decoded your investment word, I have also decoded your banking word, and under banking we have a different things, under investments we have a different things, but as I said, we can't separate them, they are already married together. All right, and it's a very kind of a Fevikwik knot, the knot we have tied with Fevikwik, so it will